Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin. It is July 7th. Hope everybody had a happy Independence Day, or if you're a strong libertarian, maybe you call it Secession Day. July 4th, 1776 was in fact Secession Day. Anyway, a little political humor there. All right, well, what we're looking at here is the S&P 500. This is where we normally start, and I haven't done a recording for the last couple weeks. I was in Port Aransas 2 weekends ago, and this weekend, of course, was the Independence Day holiday, July 4th. So anyway, back in and looking at the market. The market had kind of the week was. We had kind of a half day on Monday, and then nothing on Tuesday, and then we started back up. It was just a weird market week in terms of just the market being open. But it was all in all, it was an up week. Really just a kind of a high ranging week. Not a whole lot happened. But it continues to kind of dice back and forth as it decides whether or not it wants to go down to here, or if it's So let's talk about a couple possibilities. One possibility is we've got some sort of triangle kind of developing, but I don't know. This is the weirdest looking triangle I've ever seen. So I'm not too excited about that particular option. I'm still holding out for this option here, where we're going to come down into this area just below this low. I don't know. Who knows? May or may not happen. Certainly the market's going to have some sort of sell-off. Maybe it only comes down to here. The problem with only coming down to here, though, is it needs to really be proportional with this kind of move right here. So both in time, well, it doesn't have to be in time, but actually that's not the right one. That's not the move I'm thinking of. The move I'm really looking for is really right in here. So you really got to go to like a daily chart. So let me look at a 2-year. So what I'm interested in is this move right here. So we kind of went up and then we pulled back into here. And so this time here, what is this, from April 2016 to July? So what is that, 4 months or so? So this really needs to be about that too. So from mid-June to, it doesn't have to be in time, but in terms of price, this pullback here, it should be about the same. And so I'm looking for the market to pull back in here. It's really not that important, as I'm going to show you here in a minute. The bigger trend, which is what we're really concerned with here on the Middle Class Investor, is the bigger trend is we're putting in some sort of top here. And maybe we get up here to 25.50, maybe, and I do stress maybe. I'm going to show you a chart here in a minute from Elliott Wave that I think is pretty accurate, and that's what I'm focused on. I'm focused on this finishing out, another down up sequence, and then finishing out this final pattern here. So with that said, let's go look at some other stuff. Let's look at the 13-week Treasury. This is the one that predicts what the Fed's going to do, or doesn't predict really. It just kind of gives you an idea what the Fed's likely to do. This long line right here, by the way, is bad data, so just ignore that. But you can see this has been pretty much on a tear. I mean, we got a pretty serious trend going on here, and if it does pull back, it'll pull back into this area right here, probably chop around sideways and then pull back into this area and then continue higher. So this thing is really going to keep going. So I think once it broke out here, man, it was just off to the races. So keep looking for the Fed to continue to raise rates. Now, what might slow the Fed down here is, well, first of all, let's talk about this. The 10-year Treasury, what's interesting here is I kind of marked the gap right here with these lines, and man, it pulled back and closed that gap and then turn around and bounce. So we're going to look at some, how do you get long interest rates? We're going to talk about that today, and the best way to do that is to look at the something called the TBT. The TBT is just an ETF, and we've talked about ETFs on here before. ETFs stand for exchange traded funds, and they trade like stocks. And something like the TBT is very liquid, so you don't have to worry about it. You should look up online like what the expense of it is and stuff, because if you do hold these for a long time, because they use futures and stuff to make these instruments, they do have expenses. So, but we've got a really good buy signal here on the TBT. You can you could wait and see if it pulls back a little bit, but a lot of times, man, once these get going, it might go all the way to here to 43 and then pull back to 38 or something. So you can wait for the pullback, but sometimes that it doesn't pull back. That's just a risk you have to run. But you can see here the TBT pulled way down, found a low, rallied, made a lower low, rallied, and now we're making a higher high and rallying. So it's a great buy signal on the TBT. Very, it's just got a great risk reward on it. You got about $7 here worth of risk. Maybe let's call it $7.50, and you've got I don't know, at least $55 to the upside here. Let's see, 54. Let's call it 54. So this is likely to go to 54 before it even slows down. And even then, it might not slow down. It might just continue all the way up here to about 85. So you got about $7 worth of risk and potentially $50 worth of return. So it's a good reward to risk ratio for a trade. And basically, your stop would be down here below this low at around 30 bucks. So if you're interested in getting long interest rates, it's a good place to take that bond fund money. Hopefully you're out of bond funds at this point, and you can roll it into something like the TBT and actually benefit from rising interest rates. We forgot to look at the volatility index. The thing I want to point out here that's important is just how we're narrowing. We continue to narrow in this V here. Right here and right here, and eventually this is going to break out. I don't know if it's going to be next week or if it's going to be 5 weeks from now, but let's say August 1st, this thing breaks out, and it's probably not looking back for a good while. So just be careful. The chart I'm going to show you in just a minute, in fact, let's go there now, is a chart of the Dow Jones Industrial Average that Elliott Wave publishes. And let's see, maybe I should zoom in on this a little bit, see if I can nah, it doesn't really let me do that. Okay, well, what we're looking at on this chart, this run up here is from the 2009 bottom. And this run up is a primary degree. So you can see here 1, and we got 2. This is what's called a flat. That's why the B wave. So this is A, B, C. The B wave is higher than the wave 1. It's not unusual. and then you got wave 3, and then this is wave 4, and you can see we're in the last little bit of wave 5 here. And of course, what happens in wave 5, I guess I can zoom in with this. What happens in wave 5, obviously, is that you get, let's see, where's my, I want to make sure this is on the screen so you can see it. What you get in wave 5 is you get a return back to the pivot before the swing high. So this right here would be the last pivot into this high, this wave 4 right here. So what you get is you usually get a return into the wave 4 low. And the reason that you get a return in the wave 4 low is because there's nothing magic about wave 4. The reason you get a return to that is that's the last pivot into the most recent high. That's kind of how the market works. That's where that's the way you want to think about how the market works. So, oh, something happened there. Let me see if I can get that back. Yeah, there we go. Okay, so if it comes down to here, then what we want to do, we're probably going to get some sort of bounce that looks like this, an ABC. And then the next move is going to be something like that. So obviously you want to be, you want to be out. It'd be nice to be out right here, right? So one of the things I wanted to point out is, here's the top of the channel right here. How much more of this trend do you really need before you're willing to risk that? So that's really the question I think is important. And you can see there's maybe, we might go down like this first and then rally back up. So you might, there's probably another 3, 4, 5% there, but right there is like 20. So you just gotta think in the terms of probability and risk reward and things like that. The other thing that's important to notice here is that this is the cash to equities. Let me scroll down here a little lower. This is the cash to equities ratio, and you can see here that really almost the whole time since the 2009 low, we have not exceeded this dashed line in green, except for this area here in 2015. I think this was 2015, which makes some sense because this was the wave 3. If I draw a line right kind of up this way, this is the wave 3 high. See how that lines up with the wave 3 high? Well, maybe you can't see it because that's off the screen. But this peak right here, this peak above the green dash line lines up with a wave 3 high on the chart. So that makes a lot of sense that we exceeded it there. But since 2009, that's the only time we've exceeded that, and you can see we're right here at that line. So I would say that risk is probably picking up, and you just need to be aware of it. I mean, that's investing, that's trading. When risk picks up, you step to the sidelines. Let's look at the euro US dollar here in a minute. Let's look at Germany. Let's look at some of these countries. We've been looking at those all along, so we'll continue to look at them. You can see that Germany is getting close to this blue box. Now, it might not make it. I don't know. My guess is it probably will. It'll probably move up into this area. And then that'll probably mark some sort of top in Germany, some sort of intermediate term top. And you can see this goes all the way back here to 2014. So, I mean, if it tops here, that's probably a pretty big top. And next move down for Germany would be somewhere around here, around 21, around this area here. Japan is already up into that area. The correction in Japan doesn't go back as far, but you kind of have this correction on correction. So again, I would look for Japan to pull back to this low right here where this blue box is. And the United Kingdom, man, it looks it almost looks like to me the United Kingdom is already topped, but there's a possibility that might not have, because this could be the start of a new kind of like a wave 5 bull market or something. But right now it's staying in the channel and inside this channel, and it doesn't look steep enough to make this, and also it turned right here, right in the 62% retracement area. So it could be that the UK is already topped for now, and there's nothing to really look at there. Now, one of the things you might recall is I was talking about the FXB. Whoops, for some reason that didn't come up. Let's try that again. FXB. FXB is it's a currency ETF. So it's an ETF that trades like a stock. It's a stock. Doesn't trade like a stock, but it's based on the currency. So, what's happening with the currency? Excuse me, we're going to look at it in a minute, but just looking at this chart, this looks like it could pull back, to here, just below this low right here. And I would go ahead and give it some room to do that. And then this is going to be a great entry for the FXB if you want to be long the British pound US dollar, which might not be a bad place to be. I mean, I don't know for sure, but the reward to risk looks really good. All right, let's switch over to the TOS charts and look at some of these currencies, and gold and silver and the euro. And so here's the euro. You can see we had this really sharp sell-off back in 2014, 2015. We've been trading sideways, kind of in this triangle. We came down, made a low, had a real strong rally up, and now we're at this descending trend line, and it looks like the euro, US dollar, wants to turn over here and go down, probably to at least here, to this area. Let's draw a box on there, just so we remember, because this is the last swing pivot low into that high. So I would say the euro is going to at least pull back to here, and then it could, from there, it could rally and just keep going. I mean, this low, I don't know. When I first saw this low, I thought it was pretty weak, and then it might roll over and make a new low. But this is a pretty high retracement for it to come down and make a new low. So I would say if it pulls back into this box, or maybe even slightly below, that's probably pretty bullish for the euro. So euro might be another place you might want to look at putting some money. Let's look at oil. Oil's been in the news a lot lately. You can see we had this big sell-off back in 2008, 2009, run up, and then now we got another big sell-off, and then oil looks like it's starting to roll over. Now, what's hard to know at this point, there's no way to know really. Oil's clearly rolled over. The question is oil on its way to make a new low, or is it going to make some sort of triangle and then the bottom's in? And right now at this point, it's just a guess. My guess is it's going to make some new low. The reason is this looks like a wave 4 right here, and this came up, and this could just be another wave 4 of lesser degree. But there's no way to know. So really what you want to do is you want to try to, if you're going to be in oil, if you're going to try to trade oil, you want to say, well, obviously a good place to get short would have been right up here in this box, and a good place to get long potentially is right here in this box. So I'll put this box, kind of expand it out a little bit, and that's because this was the last pivot low into the swing high. You could use this one, but it looks like, it's already there, so it looks like maybe it wants to go lower from here. Let's look at, oh, here's the British pound, US dollar. Okay, so here's the British pound, US dollar. Again, this looks like a big ABC to me. What's interesting is we had it kind of stopping way up here and it blew right through that. So there's your ABC. I drew it here, ABC. And so it looks like it's taken off. We've already talked about this on the FXB. You can see how it's made a lower low. Let's zoom in on this real quick because I think this is important. See how if this low holds, or this high, excuse me. So you have this high here, right? And then this high is actually slightly lower. If I draw it right, slightly lower, ever so slightly. So this is looking at this point kind of like an A, A, B, and maybe C into here. So that's kind of lines up with what we see on the FXB. And if that happens, and it could pull a little lower, maybe to this pivot here, this pivot right in here. So we could pull down into this area, but one or the other, right? Either this one or this one. But in either case, that'll be a higher high. That'll be higher than this high, and it'll of course be higher than this high. And that's where you want to get long. That's where you want to try to get in the British pound if it does this. So really we're not predicting. We're not saying British pound's going to come down here. What we're saying is if it does come down here, this is a good place to be long the British pound. Okay, so there's I know that's very subtle, but that's the distinction that's important. We're not saying it's going to come down here. We're saying this is looking like maybe an ABC pullback. And so if it does pull back into this area, then we want to be long the British pound. That's all. That's what I'm saying there. Let's look at gold. Gold and silver really, diverged quite a bit. In fact, silver made a low below like this low right here. Let's look at silver real quick, and then we'll look at gold. So you can see silver actually pulled down below this pivot low here, which again looks like an ABC, and you have this really long tail, which looks like a hammer. So it looks like maybe silver might be done going down. So what do we have here? Let's think about this for a second. So this whole thing here, even though this is an ABC right here, A, B, C, likely, we're probably in some sort of larger ABC. So where this is A, and then ABC is B, and then C. Okay, there's probably some larger degree ABC going on here, is my guess. So which makes this a great place to get long silver, because we got to potentially from here up to here profit, and the risk is this, there's where your stop would be. So this is risk. Let's call that RI. And this is reward, RE. So your risk reward, or reward to risk ratio, you can see just by looking at this visually, this is a lot bigger than this. And that's the kind of investing or trading you want to do. You want to enter trades where the risk. So let's say I'm going to risk $1,000. Okay, so if I enter here and it sells off and makes a new low, then I lost $1,000. But if I enter here and it goes all the way up to the target, then let's say I've made $1,800 or whatever the number is. I'm just making up numbers because we'd have to run the math, and I don't know what it is. But you can see that the risk, is. So what is the risk? The risk is that this goes down even further than where it's gone. Okay, so that means your stop is just below here, just below this candle here, and your target is up here because this is off the pivot high. So this is where your target would be. Now, make no mistake, I think we're still in a bear market, but this could be an A, B, C, whereas this is an A, B, C. You see what I'm saying? These are just larger degrees. This is a larger degree A than, this A. I know this gets confusing. I just want you to understand that we're still in a bear market in silver, but this is a long enough time frame to the target that it's easy to it's a good place to invest potentially. At least I see that. I mean, you have to see what you see, but that's what I see. Now, how could you trade, silver? Well, one of the ways you could do it, and I keep talking about these ETFs, is you could trade the SLV, which is the silver ETF. Now, actually, see, it looks bad today, but because you had this gap and then it ran down, and this one actually finished. This doesn't show rallying as much as the silver futures have rallied, but again, which is even better because now your risk. Let's look at this one, and let me stay zoomed out. Let me do it like this. Now your risk is it's even better, right? Because you can, on this one, you can buy. Let's say you end up next week end up buying right here. Well, your stop is down here, and your target is up here. So you're risking, let's say, 75 cents to make $5, and that's a good reward to risk. So that's that's the kind of thing we want to identify. It doesn't mean we're going to make money. It doesn't guarantee that we make money. It just guarantees that we don't lose very much, and that's the name of the game. You want to be able to, if you're going to put your money at risk, you want to do it in such a way that you don't lose very much, because you're going to have losses. There's no doubt about that. But if you can put yourself in a position where you don't lose very much, and you potentially gain a lot, then over time you can lose 60-70% of your trades and still make a lot of money. So trying to think if there's anything else that we need to cover this week. I think that's pretty much the highlights of this week. And I'll be back next week. I don't have any plans to be out of town or anything like that next week, so I'll be back next week. Of course, you can leave comments on the YouTube channel here. You can also comment at Investor Class, so that's @ on Twitter, Investor Class. I've got a new phone, so I got to make sure I got all that stuff set up on my phone. I don't even know if I have it set up on this new phone, but certainly leave it there. And if I see anything interesting, I'll try to put it out there so you guys at least know about it and can look it up on the internet and read it yourself. But I think at this point you got to ask yourself, how much more rally do you want to try to risk getting to make an extra 2, 3, 4%, whatever it is, when the downside is 20, 30%. So I think that's the big question. That's the reason I want to bring it up now is because you need to be able to make a decision in the heat of the moment, right? So when the market's going down and people are freaking out and all this stuff, you don't want to be second guessing yourself. You want to say, no, I decided to get out here, and that's that. I'm getting out. So that's why I'm trying to kind of foreshadow a little bit, not predict, but just kind of foreshadow if the market goes here or if it goes there. What do you do? So hope that helps everybody. All right, everybody, that's it for this week's Middle Class Investor. Thanks for coming in, and we'll talk to you next week.